Okay, perfect. Let's look at this question then. I think there was only one transaction that you picked up on this one. I think it was talking about the director's fees. So we're just gonna go straight to it, and then after that we can see good. Maybe we move on to the next one. But let's see what is happening with this question. Okay, what I can see here. Okay, this is common financial statements, right? It's a 50 marks question, 40 minutes to do the question. There will be a time where we will do a question within the stipulated time, and we have to finish. So when we start doing each and every question, when we start practicing for the exam, we're going to do the question according to the time that is allocated. Maybe I'll just give you extra 5 minutes, but we're gonna work on it together. We will try to be as fast as possible to finish it within the stipulated time. Okay. This is Ebony Limited that we're going to work on. This is my spreadsheet. I'm going to do my workings here. You did receive the email with the spreadsheet and the other questions that we did, no?
Yeah.
Okay. I'm just gonna go through the information provided, and then we start working on the question after that. Okay, so here they're saying the information relates to the financial year ended 28th February 2025. So this is our accounting period. So when it ends on the 28th of February 2025, when is it starting?
On the 1st of March 2024.
Okay, on the 1st of March, no? 1 March 2020, 1 March 2024. So this is our accounting period. So this is the 12-month period. Okay. Then what they're saying here, they're saying the company sells various car accessories and also services customers' vehicles. But now we need to understand what type of business is this one. This is it's a selling business because they do sell some car accessories, and also they are a service business at the same time because they also provide services to customers, which means each and every customer, if they have a problem with their vehicles, they come for assistance and then they assist them. So what is required from here, they want us to prepare the statement of comprehensive income for the financial year ended 28 February 2025. Okay. We're not going to do the statement of comprehensive income, obviously, because you've already worked on it. But we're just going to go straight to you see this was 34 marks. You can see that the income statement alone is going to contribute a lot in the paper that you're going to write. So we need to make sure that you're comfortable here. If you're not comfortable with the income statement, you're not going to pass your exam. 1.2, they're saying prepare the equity and liabilities section of the statement of financial position as at 20 February 2025, show workings in brackets. It is rare, Kinelwe, that they can say prepare the full balance sheet on the exam. It will always be a section, maybe current assets, or maybe it can be non-current assets. It can be equity, it can be liabilities, it can be both equity and liabilities. As you can see here, they only need equity and liabilities section of the statement of financial position. Statement of financial position, we know very well that there is a balance sheet. They're saying note some amounts are provided in the answer book. Okay, and that is something that you're going to find out about when you start answering the question. Information provided, balances and totals among others that appeared in the books. Remember, one thing I want to emphasize, everything that you can see here on the trial balance, this is something that we have recorded according to our accounting records, right? And whatever that we're going to see as part of additional information, these are all the adjustments that we need to make. So what I can see here, they gave us both years, which is the current financial year and the previous. in the previous year, which is 2024. Ordinary share capital, it was 2.4 million previous year, 2.4 million in the current financial year. Nothing has changed there. Retained income, they didn't give us this one. Loan, they didn't give us the balance. Trading stock, there's nothing, probably we don't need it. I don't know, we will see. Fixed deposit, Rainbow or Rank, they gave us the fixed deposits. There was no change, as you can see. Provision for bad debt, 19,230. This is at the beginning of the year, because if it's the end of the previous year, it is going to be the beginning of the current financial year. Then in the current financial year, they didn't give us the amount, so you have to do the adjustment. SARS, income tax, provisional tax payment, they gave us 360,100. Creditors control for 20, prepaid expenses, 8,520. Where do they go? Prepaid expenses in the balance sheet. But which side? Is this an asset or a liability?
Asset.
Why are you saying it's an asset?
It goes to trade and other receivables because they haven't, you paid early and you can still claim the money back.
Yes, you made a payment, but you have not received a service for what you have paid for, right?
Yeah.
You have paid before you receive a service. So as a result of that, that is an asset for you. This amount is still receivable to you. You can claim it anytime you want, but that depends on the contract, on the terms and conditions of the contract you have entered into with your supplier. But a prepaid expense, it is an asset. Thank you for that. Bank overdraft, there's nothing. Sales, they gave us sales, cost of sales, nothing. Salaries and wages, they gave us an amount. Depreciation, service fee income, audit fees, rent income, director's fees, trading stock deficit, interest income, interest expenses, nothing there. Sundry expenses, 710, and then they gave us ordinary share dividends, which these are interim dividends. And they gave us few transactions here, which is number B. The following adjustments must still be taken into account. The following adjustments must still be taken into account. So I'm not going to go through all these ones because it's something that you worked on it. You're comfortable with bullet 1, 2, 3, 4. This is the one you need, yeah? Okay, let's go through it and see if we can win in terms of answering the question, in terms of doing it. I don't know, but we will try and work on it just to see if we're passing or not. So what they're saying here, Ebony Limited had 2 directors. These are the 2 directors that the company has, each earning the same fee, very important, at the beginning of the financial year. So we have 2 directors here, director 1 and director 2, right? Or director A and director B. Both of them, they're earning the same fee, which means it is equal, right? And then a 3rd director was appointed on 1 September 2024, earning a monthly fee of 5,445, less than the existing directors. So which means now there is this additional director. There is this additional director that they have added. But this additional director is earning less than the others. But we don't know how much other directors they're earning. But this one is earning less than them. By how much? By 5,445. Okay. All directors were paid their fees for March 2025, which means this is an extra month because our year is ending when? 28 February 2025. Am I right?
Yeah.
And then the year is, that's when the year is ending, but they paid for March, which means there is that prepaid director's fees. So those are the ones we need to deal with. And we must not forget that there is this extra director, which means there will be 3 in March that we need to subtract because we have an additional director that was appointed on the 1st of September 2024. In this one, it's very difficult to do a transaction like this, but you need to be strategic when you're working on it. we obviously have to work on an equation. I'll just go straight to my trial balance, director's fees that have been given. So this is the full amount that has been paid to directors, right?
Mhm.
But this amount, we know very well that 13 months were paid here. We need to remove the extra month.
Yeah.
And on top of that, one director was earning less than the others and was only hired in the middle of the year. So it's just those complexities that we need to work on. So we have how much? 1,595,385. I'm just gonna write this amount here. 1,595,000, right? 385. 1,595,000, 385. Okay, so this is the director's fees that we can see on the trial balance. Then let's go back to the transaction again. I just want to go through the transaction again and then we start working on it now.
Mm.
Okay, I'm just going to remove these highlights out. Okay, let's read it again. Ebony Limited had 2 directors. I'm pointing this one, each earning the same fee at the beginning of the financial year. Okay, same fee, I think is key here. A third director was appointed on 1 September 2024. This one is key, earning a monthly fee of 5,445 less than the existing directors. All directors were paid their fees for March 2025. Now we need to go 1 month, 1 month, 1 month, 1 month, 1 month. Yeah. So that we can see here what happened. So that we can see what happened. Firstly, I will just say we have 2 directors. The 2 directors were earning the same amount. Am I right? For 12 months. Let's deal with the 2 directors first. 2 directors, do you agree? Yes?
Weren't they earning for 13 months?
Yes, 2 directors were earning the same fee for 13 months. Am I right on that?
Yeah.
But we don't know how much they were earning. So, which means 13 months we have 2 directors, right? That were earning the same fee. So I will just say 2x. I'll just do this 2x now.
Okay.
Which means this is 2 directors, but X stand for the amount they earning per month, of which I don't know.
Mm.
But for how many months? For 13 months. So times 13, how many X's that do we get here?
26.
So 13 times 2, that is going to be 26x. Am I right on this? So which means for 13 months, we have 26x, which means that one is for 2 directors.
Mm.
That one is for 2 directors that were earning the same fee. And then now, I'm just going to say plus. I'm creating an equation that is going to help us to get this amount. Yeah?
Mm.
Now, we've dealt with the 2 directors that were with us for full 12 months plus an extra month, which is 13 months. We've dealt with those ones, and we know they're earning the same fee. Now, let's deal with the one that we hired during the year. How many months we had this other director? Starting from September up until March 2024, how many months are there? It's September, October, November, December, January, February, March. How many months are those?
7.
7 months, ne?
Yeah.
Yes. So which means now for one other director, I'll say 7, and then I'll open my bracket. This director, we know very well that was earning 5,445 less than the other directors. So which means I will say X minus. So I'm saying here 7 into X minus, because I can't say 7 times X. I can't say that. I need to say 7 X minus 5,445. Do you agree with me?
Mm-hmm.
The reason why I need to say minus 5,445 is because this other X This other director is earning 5,445 less than the other directors for 7 months.
Mm.
Then the other two directors, they earning the same amount for 13 months. And then I said 13 times 2, that is 26x. Do you agree? Does it make sense? Ne?
Yeah.
It's very important that the equation has to make sense. It's very important that the equation has to make sense. Okay, this is a rand value. Obviously, I can just put R there. Now, I will say again, 1,535,595, sorry, 385 is equal to, now I will say 26x again. I will bring down the 26x. Now we need to go and break down that brackets. Ne?
Mm.
We need to go and deal with those brackets. This is now a mathematical equation. 26x plus this one. How do we, what do we call these things to factorize or whatsoever? 7 times x. How much do we get? Because we need to take the number that is outside the bracket, multiply by x first. Am I right? 7 times x. What am I getting?
7x.
Exactly. It will be 7x. Okay. Then positive 7 multiplied by negative 5,445. How much do you get if you punch your calculator? I need to, firstly, if I say positive and negative, I'm going to get negative, né?
Yeah.
Then 7 times 5,445?
Negative 38,115.
So it's going to be 38,110?
15.
115, né? Okay, 115. Thank you for that. So which means now we have now removed the bracket. We have now removed the bracket. So which means now I have 26x plus 7x minus 38. This 38 must come this side. Am I right? This 38 must come this side, and then I add 26 and 27. So how are we going to do that then? If I say 1,595,385, what am I going to do with this one? I will add it or I'll subtract it if I put it that other side. I will add it, ne?
Yeah.
Okay, so how much am I going to get now?
How
much are we getting?
1,633,500.
1,633,500. Very good on that. Then this side we're left with 26x plus 7x. Am I right? 26x plus 7x. How much? How many x's we're getting?
33x.
33x. Right? Okay. And we must not forget that x is equal to director's fee per month, right? Director's fee per month, ne? Per month. X is equal to a director's fee per month. We put X here because it stands for a director's fee per month. Had I knew how much was a director's fee per month, let's say it was 20,000, which means this was going to be 26 times 20,000 for the two directors. The X stands for a director's fee per month in this equation. Do you agree?
Yeah.
Okay. Now, in this situation, for me to solve for X, what am I going to do?
You're
going to get X.
You're going to divide by 33.
In both sides, né?
Yeah.
Exactly. And then how much am I going to get for X if I do that?
$49,500.
That is 49,500, ne?
Mm.
Okay. Which means now a director's fees per month is equal to 49,500. You agree with me?
Yeah.
49,500, that is a director's fees per month. Let me just put this bracket and say director's fee per month. Okay. Then now for the other director, that is a full one. That is a full one. That is earned by the other two directors. This one other director that was hired during the year, we know that that fee is 5,445 less than the existing director's fee. So which means now for the other director, how much are we going to get? Director's fee per month.
Mm.
For the other director, how much are we going to get?
44,500. I mean 44,055.
44,055. What is that? Is that a number? How do you call it? 44,055? How must I write that?
44,055.
Yes, very good. 44,055 rands. So how are we going to get that? Because we're saying the other director is earning 5,445 less than the other. So it's going to be 49,500, ne? Minus how much? 5,000. Yes,
5,455.
exactly. And then we're getting
44,055.
44,055. That is the fee for other director. So now let's go to income statement. Let's go to income statement now, right? So income statement, I'm going to have what? Expenses, right? And then under expenses, I'm going to have what? Director's fees. I'm going to have director's fees. Someone is joining us. Smanga is joining us. Okay. Hi, Smanga. How are you? Hello, Smanga. How are you?
Oh, hi. How are you?
Good, good. How are you on my side?
I'm sorry I'm late. There was traffic on the N3.
No problem. No problem. No problem. Director's fees. Let's carry on. We're just finishing this transaction with Kinelo, then we'll go to the other one, then we'll go together. So on the income statement, what are we going to have, Kinelo? On the director's fees, we're going to start with showing our workings, which is going to be the full amount, 1,595,000. Am I right? 1,595,385. Yeah.
Yeah.
And then what?
You're going
Just
to
with extra 1 month there. There's it. Yes. Yes, come again.
I was going to say you have to subtract 49,500 twice and then 44,055.
Yes, exactly. I'm going to subtract the first 49,500 for the first director and then 49,500 again for the second director. Ne? 49,500 again for the second director and then minus the one for the other director that was hired during the year, which is going to be 44,055. Okay. And then, which means now as a rand value, how much am I going to have in my income statement as a total? How much am I going to have as a total in my income statement?
$1,451,885.
Okay, please come again. 1 million.
$1,451,885.
1,451. So you're saying this is going to be, oh sorry, you're saying 1,451, yeah?
Yeah.
1,451,885. Okay, that is going to be, but I'm getting a different one on my calculator. Can I punch again? Eh?
Yeah.
5,385.
Double check.
And that's 49,500. Yes, please double check on your side. I'm getting a different one. I'm getting 1,452,930. This is what I'm getting, but you can double check on your side as well.
I'm still getting the same answer.
Still getting the same answer?
Yeah, let me just redo it.
Yes, please.
Oh, now I'm getting your answer. I think I said
1,000,000.
555.
Oh, okay. 4,055, ne? You said 455.
I can't remember, but I think I made a mistake with one of the numbers.
Okay, no problem. So the answer that we're supposed to be having is 1,452,310,313. Yeah. So that is our director's fees that should reflect in the income statement. But are you following now how to do the calculation? Yeah.
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 What I did, I
Yes.
only subtracted one director's one, and I got the wrong answer for the thingy because I counted 6 months instead of 7 months.
Oh, okay. So you use 6 here instead of 7.
Yeah.
Yeah, probably that was the wrong mistake. But other than that, which means you were right in your calculation. Can we move on now to the next one?
Yeah.
Okay, Smanga, we're moving with you now. Going to start a new question. We're just looking at few transactions that we believe that they're creating a problem in terms of like understanding it. So those complex transactions in the income statement, we're looking at them like a transaction for rent, a transaction for director's fees, where there are changes that happens during the year where there are increases or decreases. We're just going to look at those few transactions because you're with us now. For now, we only looked at one, which is this one that you found us like almost done with it, but it's fine. Now we're going to look at the other question, of which I want to do this one together with you so that you can also follow how we're working on it now. So we're going to start a new question. This is question 1 that we're going to look at. I think the transactions that we're gonna look at, there's a few of them. I don't know, I'm not sure how many. I think there's this one for rent that we're going to look at, and then there's this other one for employees' salaries that we're going to look at. And then I'm not sure if there is other one. There is this other one again, which is for directors. So these are the 3 transactions that we're going to look at together right now, and then we will be done with our session. But I want us to go through the information first before we can start working on these transactions. Okay. So this is income statement, question 1. It's about 60 marks. As I was saying also again, Wuti, this is going to be a key question for you to pass the exam on your paper 1. And if you're not comfortable with the income statement, more chances for you to fail the exam. So I want you guys to be comfortable with the income statement. We're going to do a lot of questions here on the income statement. I want you to be comfortable because income statement, you have to pass on it. Once you pass the income statement, more chances for you to pass the whole exam. Statement of comprehensive income and statement of financial position. That is question 1 on your question paper. That is the first thing that you're going to do on your question paper. Okay. Now they're saying here the information relates to Medros Ltd for the financial year ended 28 February 2020-2023. So our financial year, what I can see here is that it ends on the 28th of February 2023. So when is it starting? If it ends 28th February 2023, when is it starting?
The 1st of March 2022.
1st of March 2022. Yes. Okay. This is Medros Ltd. So which means it is going to start 1 March 2022, right? And when it's starting on the 1st of March 2022, it is going to end on the 28th of Feb 2023. Okay, so that's what they're saying here. 28th February 2023, that's when our financial year is ending. So this is a 12-month period. Okay, let's see. Then they're saying here, required, refer to information B, 1 and 2. They're saying calculate the profit or loss on trade in of the old vehicle, which is here we just need to do an asset disposal account. It will be very easy for you to answer the question. The total depreciation for the year, we are still going to do the question together again to repeat it, but depreciation is not something that should give us a problem, guys, please. And this account as well, I don't want us to like find challenges on this too. Very simple and straightforward. But it's something that we're still going to work on again together. Complete the following for the year ended 28 February 2023. So we're going to do income statement of comprehensive income, which is an income statement, 36 marks. You can see that like this one is, what's going on now? I'm sorry guys about this. I don't know what's happening. You can see here that this is going to contribute a lot on your marks that you're going to score. Equity and liability section of the statement of financial position. As I said, it is unlikely that they will ask you the whole of balance sheet for you to do. Some amounts are provided in the answer book. Okay, so now let's go to the information that is provided to us. Extract balances and totals for the record on 28 February, which is 2023 and 2022. Vehicles, they gave us the opening balance, no closing balance. Accumulated depreciation, opening, no closing balance. Equipment, they gave us opening and closing balance, which means now, if you can see here, nothing was purchased during the year because the equipment that we had last year is still the same as the equipment that we're having in the current financial year, which means there were no additions at cost. If you were doing your fixed asset note on the additions for equipment, there will be nothing. Accumulated depreciation, 800,000, 800,900. Here is 923,260. You can see the accumulated depreciation has increased, which means now there is a depreciation for the current financial year that is already recorded here. Fixed deposit, 1.5 million. Provision for bad debts, 15 million, 15,000, sorry. SARS income tax, okay, they gave us an amount there. Mortgage loan, opening, no closing. Ordinary share capital, nothing. Retained income, 970,750. Creditors control, 448,725. Net sales 11 million, cost of sales 7 million, salaries and wages 982,000, employers contribution 63,620, directors fees 1,925,000, rent income 174,765. And then we have 675, sorry, and then we have bad debts 15,090. Sundry expenses, it's a balancing figure. They didn't give us the amount. And then we have adjustments. I will just go straight to the adjustments that I want us to deal with. Other things, I'll leave them out that we don't have to work on. Okay, let's see. Depreciation, this one we're not going to work on, and then this one of an invoice we're not going to work on also. These are the transactions starting from number 5, 6, 7, 6, 7, and 8. These are the ones that we're going to work on. Let us focus again, guys. Can you please focus on this one, right? So that we understand what we're going to do here. If you lose focus, you don't understand the transaction, you will not understand the workings that I'm going to do with you. You will not understand how we get the answer if you don't understand what the transaction is saying. So please, let's pay attention on this one. Okay, rent. We'll start with the rent one. So what they're saying here on the rent transaction, they're saying rent increased by 10% per month with effects from 1 September 2022 as per the lease agreement. Rent is received until March 2023, which means now on the rent income, there is an extra month that it has been received for. So which means now we have a total of 13 months of rent income being received during the current financial year. We don't need the extra month. It has to be removed. It has to be taken out. It is against the matching principle. That is an income, a rent income received in advance. So for income statement, we're taking it out and we're going to record it in the balance sheet as a liability. So what I want you guys to know is that a rent income or whatever that is an expense or an income in the income statement, it is always at 100% per month. All the monthly payments are always at 100%. And when there is an increase of 10%, which means now they're changing to be 110%. I think that's the mindset that we need to have. They're saying here rent increased by 10% per month with effects from 1 September, so 2022, which means now how many months did we have 100% of rent income before it increased? We need to make sure, we need to know about that. When we're doing the rent income, let me just do this. Rent income, I want to take it first from the, trial balance first. How much do I have as rent income in the trial balance? I'm having 174,675. 174,675. This is the rent income that is sitting in the trial balance. Okay, this is the rent income that is sitting in the trial balance. Now, I need to know how many months did we have rent before increase? How many months did we have rent after increase? Rent before increase. And then how many months we have rent after increase? I want us to do that first. Okay, let's go and check. When did the rent increase? It increased when? From 1 September 2022. So which means now, how many months before increase? That's what I'm asking you guys now. Let's calculate how many months before increase. When is our year starting? Our year is starting on 1 March 2022. So if I'm counting from 1 March 2022 to 1 September, I'm not going to count September out, but I will stop from August. So if I say March, April, May, June, July, August, that is 6 months that I'm having before increase, which means I was receiving 100% of rent income within the first 6 months of the year. I'll start again. Rent only started increasing from 1 September. So which means now from the beginning of the year, which is March, April, May, June, July, August, that is 6 months, no increase. So which means now I was receiving 100% of rent for how many months? For 6 months. 100% times 6 months. Times 6 months, I was receiving rent that is 100%. Sorry, that one is before, this one is before increase. I'll just put it there on top. Okay. Then now, how many months did I receive rent after increase? It started increasing in September 2022. So I'll count from September, October, November, December, January, February. That is 6 months. But also there is March, which is the number 13. So after increase, there will be 7 months. After increase, there will be 7 months. So what am I going to do there? I'm going to say 110%, because that is the rent has increased by 10% times 7 months. So I want you to punch the calculator here. If we say 100 times 6, how many percent are you going to get? I'm going to get 600%, right? I'm going to get 600%. And then 110 multiplied by 7, that is 700% plus 70. So that is going to be 770%. That is going to be 770%. Then if I add these two, I'm getting the total here. I'm getting how much? 1,370%. That is the total amount. So this amount of 1,675,000 is equivalent to 1,370%. That is the starting point. That is our starting point before we even start to divide. Because now we need a rent after increase. That's the one we want to deduct. I'm not interested about the rent before increase. I want more. Rent is received up until March 2023. The March 2023 rent, that will be a rent after increase. So I am more interested in knowing how much is the rent after increase. So which means now, which one is the rent after increase here? This is the 770%. So out of this 174,675, which is the total rent income for the year, I need to know how much is equivalent to 770%, which is for 7 months. Okay, so my starting point now in calculating, I will say 174,675, right? 675 multiplied by, I need 770% out of 1,370%. So I will say 770 divided by 1,370. Okay, divided by 1,370. And then how much am I going to get there? I am going to get the total rent for 7 months, which is the one after increase. Please help me with this. How much are we getting there? How much are we getting?
I got 98,175.
98,175. That is the total rent for 7 months after increase. Now let's divide it by how many months after increase? How many months after increase? 7. Yes, exactly. So let's divide by 7. How much are we going to get?
14,000 and
14
25.
14,025. This is the rent per month after increase, right?
Can you
Rent,
also,
yes.
if you put 110 instead of 770, will you get the same answer for the rent income alone without dividing by 7?
If you're putting like 110 over 1,370, ne?
Yeah.
Yes, definitely. You have to get like the rent for 1 month, right? If you say 174,675 times 110 divided by 1,370, you're just going straight to the rent for 1 month. Which is a very good one, a very short one that take you straight to the point. This is the rent income after increase, right? So if you're saying, if you're going with what are you saying, Kinero, which is going to be 174,675, and then you just say multiply by 110 because you only need the one for 1 month, which is after increase. So you're going to say 110 out of 1,370, right? 1,370. You will definitely get 14,025, which is the one, which is the one after increase. But also, because you're also saying here, this one 98, without dividing by 7, you can say also 110 over 770. I think that's what you were specifically talking about 98, ne? I'm not sure. Well, like when you're saying times 110 over 770, you were talking about this 98, 175, ne? 98, 175, you can still say multiply by 110 over 770. I think you should get the same over 770. You should still get how much? 14,025. It depends on like how you do it, but the key here is this. Once you have done that, once you have analyzed this and you understand this part, it's very easy for you. It's like you're done with your calculation. It's like you're done.
I was trying to use the X method with this and I was getting funny numbers.
You can use X. You can use X.
But I don't think I understand the X method with this one, so I'd prefer to do this method.
Yes, please. Let's work on this one. I always want to simplify everything. You understand this one better, huh?
Yeah.
Let's stick on it then. If it makes things easy for you. How are you on your side, Smanga?
Yeah, I understand everything so far.
Okay, yeah, let's just stick on this method. You must know that a rent before increase will always be 100%, because sometimes the rent will increase, sometimes the rent will decrease. So if they say the rent decreased from this date, and then decreased by 10%, for example, instead of 110, you will say 90 there. So, but the one before increase or the one before decrease will always be 100%. That's your starting point. Then you can carry on with your calculation. Can I move on to the next one?
Yeah.
Extract from the salaries journal for February 2023. Let's see what they're saying here. They gave us deductions, which is 15,600. They gave us net salary, which is 47,330. Then they gave us contributions. Okay, the total for gross salaries was not posted to the general ledger. The total for what? For gross salaries was not posted to the general ledger. Remember, the expense to the company will be a net plus deductions, will be the gross salary. The gross salary of employees will be the expense that should go to the income statement as what? As salaries and wages. All relevant payments for salaries were made, but this is key here. I think this is what we need to be like thinking about more. when they say the total for gross salaries was not posted to the general ledger, which means then it is not there. This amount, if it was not in the general ledger, it is not included in this amount. Salaries and wages, 982,290 is understated in our trial balance. This 982,290, we should add the gross that was not included in the general ledger for salaries. So which means now in my income statement, what am I going to do in my income statement? Let me do this income statement. And guys, firstly I didn't show the rent income. How is it going to like be like in the total here, which is 174,675, and then we're going to subtract how much? 14,025, right? Then we're going to get the rent income that will be recorded somewhere here. And then now let's deal with the salaries and wages. On the salaries and wages, what are we going to have here? Salaries and wages, the starting point is 982 to 90. 982 to 90. So from this 982 to 90, we need to add those amounts that were not included in the general ledger, which is the gross salary. The gross salary. They're saying the total for gross salaries was not posted to the general ledger. So which means this 15,600 plus 47,330, they need to be added there because we cannot add the net salary only. Here we talk about gross. Gross is net plus deductions. Gross salary is net salary plus deductions. So I'll say 47,330. I need to add it here. 47,330 plus what? Plus 15,600. It has to be added here. Okay. And then we're going to get our total salaries. That's what is going to be in the income statement as well as salaries and wages. This amount, which is a contribution, they didn't say anything about it, and it should not be part of what? It should not be part of gross salaries. Gross salaries does not include the contributions. Contributions by employers, those ones are separate. They have nothing to do with the gross salary of an employee. Employer's contribution is treated separate. So they didn't say anything about it, which means it is included here. Employer's contribution 63,620, that amount is included here. It was not missed out. So we don't have to worry about it. But the two amounts that are key here is these ones. Deductions and net salary. Are we happy with this one, guys? Any questions?
Yeah.
Okay, thank you on that. I can move on to this one now. So here they're saying here the company had 5 directors. I think that's a starting point. We need to understand when we know that we had 5 only. Okay, until one resigned on the 30th of June 2022, right? We had 5 directors until one resigned on the 30th of June 2022. The one who resigned was only replaced on 1 October 2022. All directors are on the same fee structure, which means all of them, they're earning the same amount. The fees for 2 directors for February 2023 is still outstanding. So which means now I only have directors fees for 11 months here for the other ones, but there is these 2 directors that are missing in February 2023 that are still outstanding. I need to add them back, but do I know how much is that? I don't know. Let's go to the trial balance and see how much is the director's fees we have there. Director's fees, we have 1,925,000 in the trial balance. So what am I going to do? Let me just come this side and do the workings for director's fees. Okay. We need to go back and understand the transaction. Firstly, the director's fees that they gave us is 1,925,000. 1,910, 1,910, 925. Okay, then I'll say is equal to, because now they didn't give you even like a monthly fee. We're looking for a monthly fee here. So we don't know. I need to create a variable here, which is going to be an X for a monthly fee, right? So directors, I'll say monthly fee. I'll say monthly fee is equal to X. We need to create same thing that we did on the other side. Monthly fee should be X for directors' fees, right? So now here, there's a lot of things that are happening here. It's going to confuse us. It is going to confuse us, this one. There's a lot of things that are happening. So we need to treat it step by step, right? We need to think about it strategically with this one. Let me read the transaction again and we go through it again. We don't need to rush it. You see, like when you see a transaction like this in the exam, you would get scared. And the moment you get scared, it's gone. The transaction is gone. You will not get it. So please, guys, you need to be calm in the exam, right? Just relax. Just relax. You must relax in the exam. Don't panic. If you don't know something, you don't know something. But the more you panic, it will make you, even like the other transactions, you might even fail them because you are now panicking. You must relax. Let's go through this one. The company had 5 directors until one resigned on the 30th of June, 2022. Let's start from here. Let's forget about the rest of the transaction. We have 5 directors here until 30 June. So which means now, when is our year starting? March, April, May, June. 4 months. The first 4 months, we had 5 directors in our company. Let me just do this. March, April, May, June, July, August, September, October, November, December, January, February. This is our 12 months, né? This is our 12 months. This is our 12 months. Let's look here what we're going to do here. Let's look what we're going to do here. March, we had 5 directors there, but we don't know how much they're earning. Right? They said here the company had 5 directors until one resigned on the 30th of June. So we had 5 directors, but we don't know their monthly fee. So I would say 5x in my first month. Do you guys agree with me here? I will say 5x. April, we still had 5 directors. I will say 5x. May, we still had 5 directors. I will say 5x. June, we had 5 directors, 5x. One resigned at the end of June until one resigned at the end of June. So now, after June, we left with 4 directors. After June, we left with 4 directors. Let's get on with the transaction now. The one who resigned was only replaced on 1 October 2022, which means now from October, we have 5 directors again. From October, we have 5 directors again. But these 3 months, how many directors we had here?
4.
Exactly. Only 4. So I'll say 4x. Then I'll say 4x here. And then I'll say 4x here. November, December, January, because let's get on with the transaction. They said here, all directors are on the same fee structure. the fees for 2 directors for February 2023 are still outstanding. We didn't pay those ones. So which means now we're going to have 5 directors up until 5 directors here, 5 directors in January. But in February, we did not pay the fee, which means in this amount, which is 1,925,000, we did not pay for 2 directors in February. Only 3 were paid. They're saying here, the fees for 2 directors for February 2023 are still outstanding. So which means how many directors did we pay here? Only 3. We know we have 5 directors, yes, but we only paid 3 directors in February. Do you guys agree with me?
Yes.
Yeah.
Okay, thank you on that. 1,925,000 is equal to how many X? How many X are these in total? 5, 10, 5, 10, 15, 20. This is 20, 25, 30, 35, 40. So 40 in total, right? 40, 4, 8, 12, 40 plus 12, and then 3. So 40 plus 12, that is 52, right? Plus 3, that is 55 in total. So which means in total, I have 55X. Do you guys agree with me?
Yes.
Thank you on that. Let's solve for X now. What do we do in this scenario?
We divide by 55.
Exactly. I divide by 55 and then X is going to be
3,500. Oh no,
3,000.
wait. I'm missing a 0.
Okay.
35,500.
35,500. Is it
35,000.
35,000?
No, it's
35,000.
35,000, yeah.
35,000. Thank you. 35,000. So now you can see here, that the monthly fee is equal to 35. We said monthly fee is equal to X is equal to 35,000. Okay. So which means now for 2 directors that were not paid here, I just need to add 35,000 times 2, right? 35,000 times 2 for 2 directors, because remember what is happening here. There's an accrued expense here. There's an accrued expense. In February, 2 directors were not paid. They're saying here the fees for 2 directors for February 2023 are still outstanding, which means I need to add them. I need to add directors' fees for 2 directors. So which means now if a director is getting 35,000 per month, so which means now for 2 directors, it's going to be
70,000.
70,000.
Oh, guys, I'm sorry, man. I'm so sorry about this. I didn't even see that I'm out from Microsoft Teams. I'm so sorry about that. What did you hear me, guys, about this when I was talking about this transaction? What did I cut on your side?
When we're still calculating for both the salaries of the directors.
You did hear me when I was explaining this 70,000, no?
Yeah.
That was the last thing we heard. That was the last
Oh,
thing I heard. I don't know about. Yeah.
I'm sorry, man. I'm sorry, man, about that. Yes, we said here 70,000. Two directors, we said they're going to be 70,000. And then I came here to the income statement. That's what I did after that to say, I'll go to my income statement, and then as part of expenses, I'll say director's fees, 1,925,000. I'll say plus 70,000. And the reason for that is because these two directors, the fees for February 2023 were still outstanding. So that is the reason why I am adding. That is the reason why I'm adding these two directors' fees, these ones. Then I was asking you guys, Wuti, how are you feeling about this calculation? Is it confusing to you? Are you following it? Is it difficult? Are you okay with
The
it?
way you explained it is like better. I didn't know how to approach the transaction before.
Okay. Yeah, I'm happy that you guys are following it. You see, when they didn't give you the amount, you must know you must have an X there. It's a must. When they just played around you without telling you an amount, because if you look at this transaction, not even like telling you how much is per month, you are not told anything. So you need to look for a monthly fee first. And then after that, you can start working on everything. So that's how we're approaching it. This one is not necessary for you to do this in the exam as part of workings, but I wanted us to break it down month by month so that we can see in March we had 5 directors, in April 5, in May 5, in June 5, then in July we had 4, and then we replaced the one that was that left us, and then we have 5, 5, 5 again, and then in February we have 3. Then that's what we do. We get 55x, and then just like that. But thank you guys for today. I think we're going to stop here. And then we will meet again. Okay, you don't even see my screen now. Can you guys see the screen on your side? I don't know what's happening now.
Yes.
But for today,
No.
it's gonna show just now. It's coming. For today, guys, that's what I wanted us to look at. But now I think I want to do with you one more question paper for income statement where we're going to cover all the transactions, because the only transactions that have complexities, these are the kind of transactions that we need to know. The other ones, it's very simple and straightforward. They will tell you that what is missing, and you just need to add it. And you see like a provision for bad debt must be decreased by 2,000. This one is simple. You go there and subtract 2,000, you bring it down, then that's going to be an income for you. So an amount of 3,230 was not received from an insolvent estate of it, they must be written off as a recovery. You go to your bad debt, add this one, and then you're done. So it's just those complex transactions that I always want us to deal with. Thank you guys for your time. I wish you a lovely evening. I'll see you tomorrow. Thank you on that. Goodbye, everyone.